Hello, and welcome to this live stream by Bybit Learn. My name is Han Tan. I'm the Chief Market Analyst right here. So for those of you who have been perhaps following us from day one, well, you might notice this. Hey, check out the new background here. As you can tell, it's 6 p.m. here in the UAE. You've got rush hour traffic right below me. But hoping that this new background can actually add a little bit or liven it up compared to the previous spot that I had in the office. Hey, do give us a shout out and let us know where you are tuning in from. Feel free to give a comment on YouTube or X, wherever you might be watching from. All right, so I'm going to just keep monitoring to make sure that the live stream is indeed up and running here before we just get started, and we will start very, very shortly. Yeah, it looks like we are live on YouTube. Excellent, well done. Hopefully, I think we are live on X as well. Just bear with me here. Yeah, it looks like we are live on X as well. Well done. Well, hold on, it's loading here. Do give me a shout out if you guys can see all of the streams, yeah, on YouTube or X. Just let us know. Again, this is only hosted on the socials for Bybit Learn. All right, so this is the education arm of the Bybit Exchange, which you know so dearly and love. All right, so let's get right to it. Okay, so we've got lots to cover here. First, let us start with a recap of some of the opportunities that we have been highlighting for these past few days. We just started these daily live streams last week on Thursday, November 6th. So if you do get a chance, feel free to check out some of these past live streams. You can find them right there on the X feed for Bybit Learn. And for YouTube, make sure you click on the live tab on our Bybit Learn YouTube channel. Okay, so yeah, we'll go over some of those opportunities before diving into what we had posted on social media earlier today. Looking at some oil prices here. I know it's a bit unconventional, but hey, in case you didn't know, Bybit has launched its TradFi products, so we're going to be highlighting them across these daily live streams. In addition to the likes of Bitcoin, which you know and love, right? And as always, if there's a particular chart you want to look at or a particular altcoin, do give us a shout out, and we'll happy to do that, be it live or perhaps in the next live stream. Okay. All right. So here we go. Let's go into. Excuse me. So we'll look at Bitcoin here. All right. So yesterday we saw that the prices had gotten to within 0.3% of the price target that we had cited even from last week. So I think that's close enough. That was a decent win, but sure enough, close to that 21-day simple moving average, as we had highlighted. Price action recently had also been resisted at that 21-day simple moving average before tumbling back down. But here we are, prices striving to go back to the 105,000 level once more, right? So just as a reminder, we are looking for that daily close above 106K before pushing up higher. And again, you got plenty of price levels to look out for along the way, right? First, it's got to overcome not just the 106K, then the 21-day simple moving average, and then you've got this downward descending line, the upper limit of the downtrend here, and then you've got the 200-day simple moving average. This is big, right? This is a longer term technical indicator that many people are keeping an eye on. All right, and then if these three can be conquered, then maybe some potential upside. 116, also another psychological resistance level before you can have any chance of trying to reclaim those record highs, right? So plenty to do to the upside, because we had noted that sentiment surrounding cryptocurrencies still clearly bruised given what happened, all the drama that we saw in October, the Uptober that never happened, right? So that's to the upside, but to the downside, again, equally crucial or perhaps even more crucial is whether Bitcoin can keep staying above that 100,000 psychological level right there in red, okay? This is super crucial, not just in the short term, but if you look back historically for the past 2-3 years, right? This has been a key level for whether or not the multi-year bull market meaning the prices have consistently gone up, right? Whether that multi-year bull market is still intact, right? If we see a daily close below 100K, that can be another catalyst for further declines, okay? So that's Bitcoin. Looking at it, of course, something that you guys love. Let's also look at something else that you guys very much love. Let me make this full screen because I had drafted it in full screen ratio. I guess that's proper terms, I guess. All right, so yeah, that 21-day simple moving average that we had mentioned from a week ago, right? So again, not just fulfilled it, but also now surpassed it. And from yesterday, we had spoken about how that 4150 psychological level has been resistance. And sure enough, you can check yesterday's live stream, right? Prices were hovering close to it, but then they came back down. And then prices trying to give it another go in trying to break this resistance. Again, resistance line, just think of it like a ceiling, right? Prices hit it and then tend to bounce back down. To be clear, this is not always 100% the time, but generally you do see this kind of behavior around a resistance level. Price goes up and it hits the resistance, comes back down. The opposite of that is support, like 3925 that you can see on the screen here, right? Prices kind of hit that floor and then bounce back up. Okay, that's support, resistance, ceiling, support, floor. Okay, so 4150, that's where we're at right now. So the expected trading range that we had highlighted yesterday is still there. Potentially 4256 by this time next week, or 4040 to the downside by this time next week. That's the forecasted 1 week trading range as of yesterday, according to the Bloomberg FX model. I mean, give me a shout if you guys want to see that model again. I can pull it up, but keep in mind that that model is live, right? So it constantly reacts to live prices. So every time you pull it up, then it gives you the latest real-time forecasted range. Okay, now diving into some technical analysis here, so if you look at these candlesticks, so each of these blocks or candlesticks represents a 1-day action for gold. Okay, so you can change those time frames up here in the top left hand corner. You can find this on both the Bybit website platform or also on the Bybit app, right? And you can change the time frames there. So this, I'm giving this the 1-day time frame just to give it a bit more breathing room, because I know not everybody tunes in exactly right now. More and more people watch it as the days go by, right? So hopefully some of these setups are still intact by the time you still watch it. If you missed out on that goal hitting that 21-day simple moving average, there are opportunities. I mean, this is the market, right? There's always going to be opportunities. And what we do here at Bybit Learn is we highlight them across asset classes, not just within the crypto space like Bitcoin that I showed earlier, but also across TradFi stuff, gold that you love. And we're going to go on to something else very exciting, right, in just a bit. But anyways, to complete that thought, these candlesticks, right, are what you call doji, D-O-J-I, and you can Google this later or ask ChatGPT what it means, right? So you do see them occasionally on the charts, and that tends to signal indecision, right? So, we'll see how today's candlestick fares by the close today, but you are seeing from yesterday and today, there is this indecision about, okay, how much higher can prices go? Can it actually, do we have enough reasons to go above 4150, or is it maybe time to come back down? Now, there are many different technical indicators that you can pull up to give you some guide. I tend to keep things clean and easy around the moving averages and also psychological levels. You can pull things up, the momentum-based ones like RSI, of course, MACD, what have you, right? But just know that from these formations on the daily candlestick in and of itself, you can infer signs from it. It shows that, okay, markets are indecisive yesterday and today as well. Okay, Doji, D-O-J-I, something for you to keep an eye on. All right, so that's a goal for you. Now let's dive right into oil prices. I'll show you the chart here real quick, but let's go into some more theory here. But before we do that, let's actually talk about something else that we know you are really, really excited about. So the giveaway, all right? So for these daily live streams, we have set aside a pool of 25,000 USDT in potential rewards. All you got to do is, if you are new, especially, scan the QR code, sign up, and then you could get your chance at your share of 25,000 USDT in rewards and potentially more, because when you actually do scan the QR code, we'll bring you to a page on the Bybit website. And from there, you can actually complete various tasks that could earn you additional rewards. Okay, so 25,000 USDT, that's the pool we have just for these daily live streams, which again you can find on YouTube and X. Scan the QR code now, register. And also for new users, when you register, you get a leg up, because just in the act of registering, and after that, the act of doing your KYC, which is submitting your IDs, and so that we know more about you, right? Completing those steps can also get you more rewards, right? So make sure you complete those steps. But first things first, scan that QR code. All right. Now let's go to what we would like to talk about. Okay, so oil prices, right? Right now it's falling. Okay, I don't know if you caught a glimpse of that chart that I showed for a brief moment there, but don't worry, I'll be showing it for a much longer time in just a bit. But let's just go over some of the whys. Okay, so remember, I'm more of a fundamentals kind of guy. And all that means is I like to see what's happening beyond the charts. Some people who are like technical traders, they just like to confine their vision to just what's happening on the charts, right? Look at different indicators, and that's all the info they know. They want, or even that's all the info that they care about, which is fine, right? To each their own. But me, I'm more of a fundamental guy. I like to know, what's actually happening? Why are prices behaving the way they are doing right now? Okay, so with that said, just a few hours ago, you got OPEC. Now, if you're not familiar with OPEC, this is the organization of major oil-producing countries like Saudi Arabia, right? They have a group that controls about, I think, 20-30% of the total oil that's supplied in the world, right? So they just came out with a report, just a few hours ago, saying that, for Q3 of this year, they actually think there's a global surplus. Surplus meaning there's more oil being pumped out into the world than the world actually needs or that can use up. Okay, right? Surplus, right? And more importantly, this was a change from a previous estimate that they just had last month, just last month, saying that, they actually think that in Q3 of this year, for those 3 months, there was actually a deficit. Deficit meaning there is less oil being supplied than what the world can actually use up, right? Deficit, not enough. Okay, so today they just said, actually it's a surplus. Okay, real quick, go down to the notes there. This is some Econs 101 here. Okay, and you see this kind of theory being played out across not just economies, but also for prices, from Bitcoin to oil, right? Stocks even, okay? The idea is that when supply, there's more of something than people actually want of it. Supply is more than demand. Well, guess what? Prices tend to go down, okay? You can apply that same example, think about houses. When there's more houses than people want in a particular area, then prices tend to come down, right? Whereas in areas where people really like living in the area, but there are not enough houses in that area, town, city, whatever, then you see prices go up, right? Just like here in the UAE, we have seen how prices of homes have in Dubai and Abu Dhabi have just really skyrocketed in recent years. Why? Because there's a lot more people coming here, including myself, right? Get over here, they want property or they need a place to stay, right? And it takes years for these homes to be built, right? So, and that's why when demand is higher than supply, prices tend to go up. Okay, so going back to the first point, right? The idea that there is a surplus, in other words, supply is greater than demand, prices go down, and that's why prices are falling today. Okay, now also in well, let me do a quick live check. I'll do it in just a bit, but I just want to keep it on the screen here. You've got the International Energy Agency. This is a big entity that consults or gives advice to governments and other entities about their outlook for oil. Okay, and so they are a big, powerful voice in the oil markets, IEA, right? So they, well, actually just today as well, yeah, they actually came out with an outlook, a longer-term outlook, that they believe that global oil demand is set to rise by 13% by 2050. Now, this again is a bit of a change because previously, about a year ago, they were actually saying, well, they think that oil demand for the whole world will actually peak sometime within this decade by 2030. Okay, now they're kind of pushing that out, saying, okay, well, maybe not. There's maybe more room for growth, right? The idea that there's more demand coming in, so that should help support oil prices. Okay, so long story short, what the OPEC report, right, is triggering some downside, but perhaps some support for oil prices coming from the IEA's report. Just I think earlier this morning UAE time. Okay, so that's something to be aware of. Now, looking ahead, right, you've still got another report coming out of the IEA in just a few hours from now, or maybe it's out already. I'm not quite sure. I've got to do a quick check here, live here on the live stream. Okay, so you've got that coming out. So again, markets kind of tend to react to when these big, powerful entities in the oil markets, right, when they say markets react for oil. Then tomorrow you've got the weekly U.S. crude stockpiles report. That's from the U.S. entity, right? So now this one is usually released around this time, okay, which is why I'm picking oil for Wednesday. However, today is Veterans Day in the U.S., so bond market, cash trading for treasuries, that's U.S. government bonds, and also some data is being delayed. This one will actually be released tomorrow, November 13th. Okay, so still stuff to look out for in the next couple of days, and then in a couple of weeks from now, November 30th, you've got a big decision by OPEC Plus. Now, this is OPEC Plus, is OPEC plus its partners, right? So it's not just Saudi Arabia and gang, but also you got the likes of Russia. So Saudi Arabia and Russia are often seen as the de facto leaders of OPEC Plus. So now they have already told the world that, hey, they're going to stop increasing output between now and Q1 of 2026, so for the next few months. They've already conveyed that. But at the same time, we also know this, those of us who've been watching markets for a long, long time, OPEC Plus loves to surprise markets. Okay. Coming into their latest meeting, they had already been pumping out a lot of oil. Okay, or at least trying to restore the output that they had pulled back since the pandemic, right? So they have basically fully done that already. Now they have committed to, okay, fine, we'll keep output levels steady until around March 2026. So any signals that they have about, okay, well, what happens beyond Q1 2026, markets could well move as well. So even though you think that, that's so many months away, right? Know this. Markets are forward-looking in nature. Okay, what that means is that today's prices reflects tomorrow's hopes. Okay, so even though before something has happened or not ready, right, prices react, right? Be it the Fed, be it OPEC Plus, be it the outlook for a company's earnings, the outlook for global oil demand and supply, right? All that plays into today's prices. Okay, markets are forward-looking in nature. Today's prices reflects tomorrow's expectations. Okay, all right. So with that in mind, we'll tell you what. Let's just finish the slides before we go to the chart. Actually, maybe this might not make as much sense. Let's go to the chart. Okay, cool. So here's the oil prices. Okay, now keep in mind here on Bybit and in fact many platforms, you've got two main or instruments or two main ways for oil, okay, or two main types of oil. okay, or at least oil benchmarks. Okay, so again, to find them, you just gotta hover your mouse over the top left-hand hamburger menu on the Bybit website or the app, or well, on the app it's different, but yeah, just look for TradFi, okay, and then under commodities, scroll down, you notice you've got two, right? Now, WTI crude, which is what I've got on the chart right there. WTI crude is the US benchmark for oil prices. Okay, so that the price that you see on the chart right there, that's used as a benchmark for US crude. Okay, now you go above it, there's Brent, that is the global benchmark. Okay, that means there's a benchmark used around the world. I won't go into the technical details, like WTI is Cushing, Oklahoma, then Brent is the Black Sea. But yeah, you don't need to all know all that, right? Just especially if you're new, just trying out, just know this: WTI US, Brent is global. Okay, now they often move in tandem. Now, of course, not perfectly. See, like Brent is now down 2.2%, whereas WTI is now down about 2.5%, right? But they tend to behave in the same way. There have been a couple episodes in the past, especially in the onset of the pandemic, when both of them really diverged. WTI even, WTI even went into negative, if you remember those. But that's just all the technical stuff. You don't have to worry about that. All you got to know is WTI, US, Brent, global oil benchmark, they behave basically similarly most of the time. Okay, so that's how you find the oil contracts on Bybit. Now look at some of these lines here. Okay, the green line is the 50-day simple moving average. Again, I like to keep my technical analysis clean and easy to follow. There's so many indicators that you can pull up here on Bybit, right? There's so many of them, but here's some that, especially if you're new, you can just pull them up. Just click on here, just type in moving average, and then you'll find this one right here. Okay, and then you can tweak and change as you see fit. But the 50-day simple moving average, I pulled this up because look at how prices have often behaved around it for the past few months, right? So this goes back to around June, right? You had resistance there, resistance again, that ceiling, right? Hits it, comes back down, hits it, comes back down. It becomes resistance, turns support here for a little bit, for just a few days. And then, of course, we have this huge distortion here from the conflict in the Middle East, right? And then come back down. So over the past few months, right, you've got not just the 50-day simple moving average, SMA, acting as support and resistance, but also you've got the 21-day simple moving average. Also similarly, see resistance back in July, support back in June, resistance on these episodes in September, another resistance episode there in about a month ago. And so important, right? These past couple of weeks, it's been that floor that's helped supported oil prices, particularly WTI crude, or US or USD as we call it in the Bybit world. Okay, now keep in mind, I had drawn this chart from way early in the day, many hours ago, and sure enough, it is now not just testing the 21-day simple moving average. We'll see whether it closes below it, right? But we have to see if that 21-day simple moving average will actually hold, right? Given what we have seen out of OPEC out of OPEC, and also some of these other big voices in the oil world, right? So right now, it's threatening to go below it, which brings us back to the potential setups. Okay, so let me just pull up the slideshow again. And folks, if you got any questions, feel free to just post them in the comments. I'll try and respond to them as quickly as I can. In fact, let me just do a bit of that right now while you guys check out what's on the screen. Excuse me. Yep, okay. Let's go on X. Thank you to those of you who like the post on X. Okay, cool. So let me just walk you through some of these potential scenarios, okay? So earlier we mentioned the fundamental or the event catalysts, stuff that you got to look out for out there in the real world, what people might say that could move prices. But from the charts, right, if you're looking at a daily close above the 50-day simple moving average, right, then we could see a potential target of 64. If we see a daily close below the 21-day simple moving average, then we might be keeping an eye on the $58 level. Okay, so 58, 64, going back to the charts, here's what it looks like, right? So 58 around here. As you can see, that was the previous support region, or just below 58, between 56 to 58, right? Where prices just kind of bounce off right there. If there's further declines, especially a daily close below it, wouldn't be surprised if we find oil prices going back into this territory to try and test support again. Otherwise, for the upside, you got to have a daily close above that 50-day simple moving average before you can talk about, say around the $62 level for these resistance levels and potentially for the upside. But from a fundamental perspective, right, you got to have a meaningful sign that either, hey, global demand is really weakening and that could pull oil prices much lower, or there's a lot more supply coming in, right? That could also potentially pull oil prices lower, or the opposite, right? Whereby all of a sudden, well, guess what? The global economy is actually doing really, really well, right? And that could push up demand for oil. So, and this is why we keep an eye on, say, like the jobs market data that comes out of major economies. Like earlier, if you had tuned into my live stream yesterday, there was some news about how the jobs market is actually growing weaker, right? We've got the US government shutdown right now. Even though there was cheer that, hey, the US government shutdown, the longest US government shutdown in history, could be ending soon, right? So that cheered markets yesterday, but then it just came back down because of the commentary out of OPEC and also the IEA, right? So yeah, you got to have some really major signs about the supply demand equation, as we call it in the markets. I think that will be required for it to really break out of this range, because otherwise, even if you zoom out and you can just hover your mouse on the chart to the bottom here, and you can see how, except for that spike in the summer, it's been very much confined to, the $56 to about $66. So this $10 range here for the past few months, right? If you go further back, right, you remember oil prices were on a whole different level, right? So like this support region here was around $67 or so, right? Now we're actually below that now, and clearly below $60 right now as we speak. Okay, so yeah, that's oil. So we'll be keeping you guys posted on how oil behaves in the days ahead. Now, don't forget, we've also highlighted many different other assets for you guys to check out, right? So, for example, China H, we had mentioned this from last Friday in our week ahead preview, right? Something to keep an eye on. And sure enough, Monday, Tuesday, Wednesday has been going up so far. So we'll see whether or not it has got enough reasons to go past 9771.75 to hit a new multi-year high, right? That's something to look out for. UK 100, have been posting new record highs for the past few days, and then even today as well. So again, another doji here. Markets indecisive, right? About, okay, well, how much further can this go? Because remember the inverse relationship between major economies or major countries' stock markets, right? This is for the UK, the 100 biggest companies in the UK stock market. It tends to go in the opposite direction, inverse relationship with its currency. So if right now you've got GBP USD, let me just kind of zoom in here to, again, these are all daily timeframes, So pound dollar really weakening right now. The British pound is weakening against the US dollar, and for the past couple of sessions, then that's why you've got the UK 100 just really taking advantage of it. Okay, we've got 1 more minute left. Perhaps something to keep an eye on back in the crypto world. Here's some news here. So this is for Ripple. It's climbing today in tandem with gains across the crypto space. keep an eye out tomorrow. You could see the debut of the first true spot Ripple ETF. Now, for those of you who have been following the markets for a while, you know that there's another one by Osprey that's a Ripple ETF, but it's got Ripple mixed in with other stuff. Okay, so this one, there's developments, legal developments about it potentially getting the go ahead, and it could even be listed tomorrow. I mean, it's something to highlight, but also we know this, right? Since the early euphoria over ETFs, I think that has kind of waned already. At least this year. So, although ETFs, in theory, it does make it more accessible to more retail investors who want to buy Ripple and other cryptos, but are perhaps less open to it, and they would rather invest in it via an ETF. That's an exchange traded fund, right? So even though theoretically an ETF debut or launch in the market should theoretically increase demand for it, but in reality, we have seen it that boost to prices has not really panned out as much, right? So yeah, since the dramatic October 10th episode, you've got Ripple that's basically holding sideways, and a lot of cryptos as well. So just kind of still, nerves are still raw, right? They need a really, really big positive overture for them to really come back into the markets again. Okay, so that brings us to the bottom of the hour. Thank you so much for tuning in, and don't forget, so on YouTube, you can find the link in the description. You can just click on that and perhaps get your chance at your share at 25,000 USDT in rewards and potentially more. For those of you who are watching this on X, you can find them on our Bybit Learn X feed. You got to scroll through, and I've been posting there as well. And I believe I posted the link also in this post for this live stream. All right, so check them all out there. Don't miss out. And of course, don't miss out on more market insights and analysis. If you'd like to hear more, do give us a shout out. I'll be happy to accommodate your request, be it charts that you want to look at, some on-the-fly analysis, or further questions about why a certain market is behaving the way it is, not just in cryptos, but you can expand out to even individual stocks. I've got the Bloomberg terminal here, and hopefully I can, give you a solid enough answer live during these live streams. Okay, thank you again as always, and I'll see you guys tomorrow. Bye.